Wall Street is eyeing a flat to lower open on Thursday. A more hawkish Fed Reserve continues to be factored in. The central bank's statement came in as expected on Wednesday, with the Fed announcing plans to unwind its balance sheet by $10 billion per month starting in October. Meanwhile, the central bank signaled one more rate hike this year. Today's U.S. data saw a spike in manufacturing conditions in the Mid-Atlantic region. The Philly Fed said that its manufacturing index rose to 23.8. Meanwhile, weekly jobless claims fell sharply, reflecting a smaller than expected rise in new claims in Florida following Hurricane Irma. Also, S&P Global Ratings downgraded China's long-term sovereign credit rating, citing increased risks from its buildup of debt. And in the previous session, U.S. indices closed mixed. Shares in the semiconductor equipment, food, beverage, and tobacco, as well as tech hardware equipment were under pressure. Meanwhile, shares in the transportation, consumer services, as well as banks gained strength. 59% of S&P 500 constituents traded higher yesterday. And moving on to company news, Google is betting on smartphones again. Alphabet's company stated it would pay $1.1 billion for the division at HTC that develops Pixel smartphones. And there are reports that Tesla is working with AMD to develop its own AI chip for self-driving cars. According to the CNBC report, the electric car maker has over 50 employees involved in the project. And in overseas markets, Asian markets were mixed today. The Nikkei gaining nearly 0.2%, the Hang Seng flat, and South Korea's Kospi off nearly 0.25%. European indices are trading higher, with the exception of the flat FTSE. And here in the U.S., the Dow is in the focus for that index. Long positions above 22,320 are preferred, with targets at 22,400 and 22,440 in extension. And for the S&P 500, the intraday support stands at 2,500, and for the Nasdaq, the intraday support is at 59.60.